Hello traders, it's Sunday, March 26th. I'm trying to keep up with my Sunday videos, so let's get started. The last video I did was Thursday, and the stock that I highlighted was CHWY. I loved this upward sloping trend line. The breach, this is a low plus trend line. You can also see another one drawn from that same point breached right here. We've also got some low minus trend lines that are breached. As I mentioned in the video, we don't want to poke through these. We want to blast through them with a long red candle. And that's what we got on Thursday on heavy volume. This was also a post earnings reaction. So the market did not like the earnings announcement, and you can see how the stock continued to follow through. Let's zoom in and then you can see that's the price action on Thursday, and you can see the follow through selling on Friday. So very nice pick. I am focusing on day trading right now, and we'll get into that a little bit later. Another stock that I highlighted for a short was GPS. And here you can see that was the price action on Thursday. The stock continued to push lower on Friday. It did bounce because the market rallied. So we know that we need to watch what the market's doing in this environment. Let's go back to Thursday, take a look at what happened to the stock. This is where the video came out, and we had a little bit of a bounce off of the low on Thursday. And I had mentioned to you that the market looked like it was poised to roll over. We had a nice bounce in the morning, but a wimpy one on light volume. Please go back and watch that video. I gave you the tells that told me that the market was ready to roll over. We needed to look for stocks with relative weakness, and it was about an hour after the open. That was a beautiful short that you could have taken advantage of. So we also had a long position in Netflix that I showed you. The market right now is chopping around, and that's why I feel very comfortable doing this video about 5 hours before the overnight markets open. I don't care if the S&P is up or down right now. It doesn't matter, and I'll show you why in just a little bit. Netflix was the long that I showed you Thursday morning. So let's go back and take a look at that. And you can see stock opened up, pretty much hit resistance Thursday, but here's a really big tell. Do you remember what I just showed you happened to the market on Thursday? It sold off and sold off. And here you can see Netflix held its relative strength all day. As soon as the market stopped going down late in the day, look what the stock did. It took off as soon as it had strength relative to the market. Let me illustrate that by putting up the overlay of the S&P 500, and then you'll be able to see it very clearly. So this is your price action from Thursday. Stock rallies up, up, up. So did the market. Then the market starts to gradually lose its strength. And as the market rolls over, it tanks big time. What did Netflix do? Netflix pulled back, but not nearly to the degree that the market did, because you can see the market made a new low of the day. This was the opening gap for Netflix. It preserved almost all of that. As soon as the market starts to show a little bit of support, zoom. Look at that baby take off. And that's what you're waiting for. You've got a higher low double bottom. So let's take a look at the SPY. Netflix looks great. I still really like the relative strength in Netflix. I think all these stocks are going to continue to work for day trading. I think Chewy is a good short. I think GPC is a good short. I think Netflix is going to be a good long. So let's go in, see what the market's doing. I'm going to take this overlay off just so that our charts aren't quite as obscured. And I'm going to go in to take a look at what the market's doing. Everything that we do starts with the market. Pete, why aren't you waiting for the futures to open up? That'll give you an indication of how things will look Monday morning. Well, the market's not going anywhere. Unfortunately, for swing trading, it's not going anywhere, so we don't really have a trend. But for day trading, the environment has been very target rich because we have big intraday ranges, long green candles, long red candles, mixed One day you get a long green candle, the next day you get a long red candle. As soon as the momentum is tried in one direction and that momentum stalls, we try the other side. And the volume had actually been very good right up until the FOMC statement last week. Now you can see Thursday and Friday, the volume was starting to wane a little bit. So always in quiet, dull markets, we have to be very, very cautious. Err on the side of the caution because we don't have that key element. When we have volume, that tells us that there is conviction and that move can be sustained. So let's go into the 5-minute chart. Let's take a look at the price action. Now, I will say that when it comes to what the market is doing on a longer term basis, I'm not comfortable swing trading from the long side right now. I've been through this before. We have some credit concerns starting to surface. We had SIVB, then we had Credit Suisse. Now, all of a sudden, we have credit default swaps in Deutsche Bank going sky high. Well, that is the insurance that guarantees that bond purchasers are going to be paid, and that insurance on another big bank is going up. Where there's smoke, there's fire. Asset managers are not going to stick their neck out in this environment. They just aren't. There's no compelling reason for them to plow money into the market. We have the Fed still in tightening mode. The FOMC statement last week was hawkish. You would think that with the credit backdrop deteriorating, that they would be a little bit more dovish. Not the case at all. In fact, they said, hey, we're still seeing signs of inflation. We're still leaving the door open for a rate hike in May. We don't know if the economy is going to have a soft landing or not. We don't know the extent to which this credit crisis could spread in the banking sector. On and on and on. Don't expect any rate cuts at all in 2023. There were 7 points out of that FOMC statement that were very hawkish. So we have a hawkish Fed. We have economic conditions probably going to slow down, and the Fed did mention this in their statement. Goldman Sachs came out and lowered their economic growth projections for 2023 by 0.3% because they see tighter credit conditions. Banks are going to be reviewing their balance sheets right now, going, hey, do we have any problems here that we need to be aware of? They also know that other banks are going through the same process, so they're going to be more restrictive in their lending practices across the industry, so they know they can charge more for people that are looking to take out loans. Same is true for businesses. Tighter credit conditions restrict economic activity. So we can expect that in the future. The point is, stock valuations right now are not cheap. Companies are trading at a forward PE of 18. That is rich by historical standards. So why would an asset manager right here decide this is the time that they need to come in and drive this market higher? Heck no. They're going to wait to see how all of this credit stuff plays out. And right now, it doesn't look so good. And you might even get a month or two in, and we get earnings in about a month or so. And you could have a nice little earnings rally. Everything looks good. Everybody's looking over their shoulder. Hey, I don't see any credit crisis here. Do you? No, I don't see a credit crisis. So you get this low volume float higher. And then out of left field, you get another bank failure and wham! The market drops and it continues to fall. Well, that's what you do not want to be blindsided by. So there's no real reason to take that risk exposure on a longer term swing trading basis. Swing trading through the course of maybe an overnight or maybe a couple of nights on a stock with very strong momentum, sure, that makes sense. Day trading completely makes sense. You don't even need to take that overnight risk. And you're getting these big intraday ranges. I did have a couple questions on my last video, and one of them was related to, Pete, how do I conduct fundamental analysis? Well, that could be a year's worth of videos, and I don't focus a lot on fundamental analysis. Here's the easy answer. At the top of my channel, you will see a link to read my free ebook. All you have to do is register with the website. And I do go through all the different I do go through the technical indicators, but I also go through the fundamental pieces of information that you need to be aware of. If you want to dig even deeper into the fundamentals, then you would need to sign up for the free trial, so it doesn't cost you anything. And I have written an extensive piece on each of these fundamental indicators. You don't ever know what is going to be the big release. The FOMC, I take that back. The FOMC is always a big statement because it's about interest rates. But there were probably about 5, 6 years when the FOMC statement really didn't even matter that much because zero interest rates are zero interest rates. So the market was not really focused on what the FOMC was doing. There were probably 20 or 30 years where CPI did not matter at all because it was under 2%. Now all of a sudden, CPI is one of the bigger numbers that we have to watch for. The unemployment report that comes out once a month, that's always important to watch. ISM manufacturing, ISM services, those are important. But if you put everything together, so the market can shoulder weak economic activity. The market can shoulder a war. The market can shoulder higher interest rates. The market can shoulder higher inflation. But when it comes to credit, that is the one thing that can lead to sustained market declines because that raises panic and fear. Investors can get very irrational and you see big moves, big drops. So credit is always the one thing that you want to watch very, very carefully. And I have an extensive piece that I wrote on credit. So right now, yes, we are watching credit. We want to make sure that we don't see more and more issues in the banking sector, and they're starting to pop up. Another area of vulnerability is the real estate developers, and SLG is a REIT, and we are starting to see a pretty big drop in that as well. This is the largest commercial property owner in New York. They own 88 properties and millions of square feet. Well, they're very exposed to credit issues. So their cost of capital is going to continue to go up. So to recap, there are a couple of ways that you can learn more about fundamental analysis. You can come into the website, you can register and read the free ebook, and that'll give you an idea of the types of fundamentals that we look at. You can also register for the free trial. And it's not just the market and fundamentals. You'll get into technical analysis for the market, technical analysis for the stocks. It's very extensive. Right now, it's Sunday. We're going to keep it light and know that the market has the potential to move both ways. We're looking for some very short-term swing trades, and we're looking for day trades primarily. You can see that the 200-day moving average and the 100-day moving average have converged. They are so close together that if we break one, we're probably going to break the other. Just like last week, you break the 100-day on the way down, you're going to break the 200-day. Then we rest right between the two major moving averages on Friday. We get above the 200-day. There we go. We're above the 100-day. So you can expect this type of price action to continue. That's why we're going to look for a long and a short. Another question that I had in last week's video was, Pete, can you tell us a little bit more about how to conduct searches? It's an area that I'm going to be writing extensively about in my educational section, but the basic part of conducting searches, and I'm going to put up custom search, is to understand what it is that you're looking for. A lot of traders, they know a good chart when they see one, but they don't know why it's good. Well, you have to quantify what is it that makes that chart so attractive to me. Is it the trend? Is it breaking through moving averages? Is it the volume? Is it the price action? What exactly is it that I'm looking for? And once you can quantify what you're looking for in a chart, then you can start to run some searches and you can look for those characteristics and qualities within the underlying stock. One of the biggest starting points is that you want to cast a very wide net. So you want to catch as many prospects as you possibly can. And then you want to keep adding restrictive criteria to those searches to limit the number of candidates and to draw that net in so that you get what you really, really might be interested in. And then experiment. Oftentimes, you might see a really nice chart and you might have to ask yourself, how can I get this chart to show up on my searches? So then you have to deconstruct the price action. And if this was something that you really, really liked, then you could see, well, hey, I really like the fact that it was poking up above the 100-day moving average. I like this big volume that was right here. The stock had relative strength. Okay, well, now we've got something to work with. We know it's above the 200-day. We know it's above the 100-day. We know this is a long range candle in here, a key bar, if you will. We can search for that. We can also look for relative strength on a daily basis. Check boxes, check boxes, check boxes. So let's run a couple of searches. Let's see if we can find some day trades. What I'm looking for, and let's go into Friday's price action because it'll be helpful for us to see what happened on Friday. And in fact, we'll even go back and take a look at Thursday. Thursday, when I did the video, it was about an hour and 20 minutes into the open. It was right in here, and we had just gotten that bearish hammer and this red candle. So please don't take my word for it. Go back, watch the video, make sure that I'm telling you the truth. I'd mentioned to you that after a big decline from the FOMC, this is a wimpy bounce, and we know that from our price action because these are tiny bodied candles on light volume. We have the 1OP indicator spiking and rolling over. Okay, that was a very nice short. Now you remember, this is what the market did. Remember what Netflix did? It pulled back a little bit, then it flatlined. As soon as the market made that double bottom higher low, Netflix took off. So that was your opportunity to trade Netflix on the long side. And here you do have a nice opportunity. You can see this long green key bar, and then you've got a beautiful bullish hammer that tests that low. So now we've got a double bottom low, and we have 1OP bullish cross into the close. All right, you could try a little long in here. Well, that would be a perfect time to try Netflix. And this is where you could see that Chewy and GPC worked out extremely well. So our objective when we're day trading is to try and time these cycles. So the market has this wimpy rally. We know the market's going to roll over, going to roll over. This gives us time to find those weak stocks so that when the market starts to show signs of weakness, we can watch that stock tick lower, tick lower, tick lower, just like I showed you in the last video. Now we've got the market tailwind we need, and we have a weak stock. See you later. So that's what you need to do tomorrow morning. I don't know if the S&P is going to open higher or lower. Be mindful of where the major moving averages come into play. Wait for that initial move. If it takes an hour for any kind of move to form, then you can probably join that initial move. As soon as it runs its course and starts to stall out, look for a reversal because that's what the market's been doing. So there you get your initial move, pretty wimpy, starting to roll over. Let's look for something on the downside. Let's go into Friday's price action and let's use that as an example. Friday, okay, well, here's a day when the market opens lower. All right, well, we saw some pretty heavy selling on Thursday, so there's a good chance with the Deutsche Bank news that this is going to have some follow through. I did short on the open on Friday. It's pretty rare for me to do that, but I felt that given the news and given the FOMC reaction that we had a chance to really drop hard. Well, here we go. There's a long green key bar right out of the gate. Mm, that's not really what I expected, but okay, it could be a little short covering to shake out some of these early shorts. But as I start to see the price action unfold, we get these pushes higher. Well, wow, those are pretty considerable. Yeah, they've been able to pound them back down, but I exited right in here. Like, this is not the price action I expected, and the volume was not that good. I was looking for stacked red candles on the open. I didn't get it. So there was a good opportunity for me to take a small gain and reevaluate. As this bearish cycle unfolds, you can see that all the way down to here, the market really didn't fall that much, and now we have a double bottom higher low. Starting to see a little bit of support. And now we get a rally off of the low. That news over the weekend was not going to produce a big market sell-off. So now you start shifting gears. If you've got a really, really strong stock, this is where you'd want to start considering buying the stock. We're trading the stock, not the S&P 500, because this is just choppy, chunky price action all over the place. We can find better stocks than this. And we want to lean on that relative strength and that heavy volume. So what I'm going to do is I'm going to look for some stocks that had those qualities. This is the price action Friday. So we have this light volume drift higher. There's just nobody to stand in the way. Every time they try to knock it down, we get the next rally up. Try and knock it down, get the next rally up. You can see 1OP was at the zero line, which tells you this is some garbage. Do not trade this. And we have horrible volume in here. So there's really no reason to stick your neck out unless you had a really good stock to trade. What might be a really good stock to trade? Well, that's what we're going to be trying to find right now. And we're going to look for some of those characteristics. So this is custom search, and we can go in. The top section is binary, so I have all of these indicators coded so that they are either bullish or bearish. Well, first of all, I want to make sure that a stock is through the prior day's high. Blue skies ahead, no resistance. I won't even consider day trading a stock that cannot get through its prior day high. I won't even consider it. It's of no interest to me at all. So let's mark that box. Option liquidity. Let's make sure that we've got some decent option liquidity. A value of -3 or -2 will be excellent. We can get good size done there. Heavy volume. Yeah, it'd be nice to have a stock that had some decent volume. We know the market didn't do anything on Friday from a volume standpoint. It was just a low volume float higher. So we're going to cast a fairly wide net to see what stocks come up. Well, because it was such a quiet day, we actually didn't have too many stocks that came up in this list. So you can see a handful of them, and we could easily click through these. What might also be nice is how about a stock that had a little bit of momentum into the close on Friday? Now, we know that on the bullish side, we should be able to find stocks like that because the market floated higher. So we're going to use ADX, which measures trend strength within a stock. All right, well, show me a stock that at least closed well on Friday. So we're going to go in and we'll use the ADX and we'll select bullish for a 1 hour basis. And we'll see what comes up. Only two stocks. ATVI is a takeover. SI, we could take a look at that real quick. Well, that is the daily chart right here. And this is not a good stock to trade. This is bottom picking. This is probably a dead cat bounce. So as soon as you come in thinking that this stock is going to go whoosh right back up to the previous level, the bottom falls out and it has another leg lower. These are just shorts who got short here, 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 here. Okay, got to bounce. Take your gains. Get out. Thank you very much. See you later. It's a dead cat bounce. So we do not pick stocks that are falling like that. So let's go in and look for a stock that maybe had a M30 good ADX. All right. So here we've got a handful of stocks that we're going to click through, and we're going to find our long probably out of this list because it's got some nice characteristics. Let's go through and look at these again. Stock is above the prior day's high. Stock had heavy volume on Friday. Stock has good option liquidity, and it finished the week strong. All right, well, let's click through. We're going to skip ATVI. AUPH. These are our new trend lines. We can zoom out a little bit to get a longer term picture where some of these trend lines come in. That is a pretty significant trend line breach right there. Another one right there. This looks pretty good. Look at the volume in the stock. So now we could take a look at what the stock did on Friday, and you can see it's pretty choppy. I mean, that's the takeaway here. This is a decent market sell-off on Thursday, remember? But then the stock did rally nicely into the close. Friday, very choppy price action. So if you see a stock like this, the first thing that your brain should be telling you is do not chase this beast. This is only good on a pullback that's starting to show some signs of relative strength. So you get a pullback, and then you start to see some relative strength. Okay, I could take a chance in here and start trailing my stop up, but as soon as this stock gets overextended and I start to see long red candles, bearish hammers, bearish engulf, I have to get out. Why? Maybe it'll go higher. Because that's what the stock does. That's what this stock does all the time. You have to take your gains and then look for another entry point. So AUPH, a little bit too choppy for me. Let's go into the next daily chart and we'll take a look at Baidu. And you can see here, downward sloping trend line. It's still got to get through that resistance. This is also horizontal resistance. There's nothing there for me. I don't like what I see here. There's not enough of a breakout for me to want to trade that. This looks pretty dang good. So let's go in and we're going to take a look at a zoom in view of this. And there you've got a high minus trend line that's been breached to the upside. Earnings before the open on Thursday, and look at how the stock was able to close near its high. Remember what happened Thursday? Market sold off. This stock was able to hold its relative strength. Orange line above zero, relatively strong. Good volume, and there should be because this is an earnings announcement. Come in Friday. This is a nice high minus breakout to the upside. Stock finishing near its high. How might I approach a trade like this? Well, if I'm going to only look for day trades and very short-term swing trades, then I'd like to buy any kind of little pullback that I might get related to the market on Monday. And as soon as the market finds support, I want to see the stock leading the charge. I want to see this stock strong relative to the market. So here we've got the stock marching higher on Friday. Beautiful relative strength for most of the day. Nice, steady grind higher. Big volume. Yeah, I like GIS. That is going to be your long to watch for Monday. This stock does not make big moves. General Mills, they're a food producer, so not a lot of volatility in this stock. If you really wanted to do a bullish put spread, I mean, it is a food producer, so this is a relatively safe stock in that it doesn't have a lot of volatility to it. The way that you would play it is you would look at that open where the earnings announcement came out before the open here. Okay, at $80, would I be willing to sell an out of the money bullish put spread on this? Yes, I would, because I've got the 100-day moving average that I can lean on. I am not advocating this trade. I am not going to track this trade because I am not swing trading right now. I'm giving you a possible opportunity to look at and to evaluate. You personally may feel that there won't be a credit crisis. I feel the risk is elevated, so here's how I would approach the trade. I'd want to distance myself from the action. I'd want to sell a bullish put spread below that $80 strike price. So I'm going to click on the $80 put on the bid side. I'm going to click on the ask on the 77.50, and you can see that that spread is 20 cents bid, offered at 35 cents. 2.5 points between the strike prices. I would need to get a 50-cent credit for this. Pete, how am I going to get a 50-cent credit for that when it's 20 cents bid? Well, the only way you're going to get that is if the stock pulls back. So if the market pulled back on Monday, market found support, stock looked pretty decent. It's holding this high minus trend line, holding half of this long candle right here, and I can get my 50-cent credit. Then that puts me all the way back down, horizontal support and the 100-day moving average, and a spread like that would yield a 25% return, and I've got to wait about 3 weeks, almost 4 weeks for that to expire. So GIS, I like it. I think it's going to continue to grind higher. You do not need to chase this on the opening bell Monday, even if the market is higher, because the market is going to chop around. Wait for your windows to set up. Watch for relative strength in the stock. You get a dip in the market, the stock is holding its own. It's not pulling back. It's not pulling back. Then you know it has relative strength. And as soon as the market starts to find a bid, the stock is going to move higher. If the bottom of the market falls out, you get in a little bit early on it, you're probably going to be okay because the stock has buyers. That's why we use this edge. Very simple search. What are you looking for? Looking for a stock that finished the week strong? Looking for a stock that had some heavy volume on Friday, has some decent option liquidity, and was above the prior day's high? Nice little momentum there. Okay, well, let's use that same logic and let's go with a stock that finished the day weak and below the prior day's low and see what we get. If I need to, I can add more criteria. My suspicion is that because the market was up, up, up on Friday, and because we're looking for a stock that was weak in the last hour, 2 hours of trading, that we're not going to have that many stocks. Well, here's our list. We can knock through this pretty quickly. Chewy, we've already looked at. I told you I like Chewy. That's a nice looking short. So let's go through the daily chart. That's always where we start. This is a nice breakdown right here on DAL. Let's zoom out. You can see there's another trend line breach right here. Also a low minus breach through that 100-day moving average. Blasts, and I mean blasts through the 200-day moving average. That is how we want to break down. Come back up and test that 200-day moving average to get through it. Nothing doing. Boom. Next leg lower. Yeah, I do like DAL. My only issue with it, and if you're an active day trader, this is not a problem. Only issue with it is airlines tend to be very choppy. So you have to watch for that intraday relative weakness, but I do like the bearish chart on DAL. It could easily be one that I highlight. EMPH, very choppy in here, up and down. We have highlighted it before, and it worked out well for us as a short. It might have been right in here. We were short, and the bottom did fall out of that, but I think we can find better. This is a nice short. HLT Hilton. You can see we've got a really nice longer term uptrend line that's breached. We are below the 100-day moving average. We are sitting right at the 200-day moving average. The volume is increasing, and you can see the relative weakness. So yes, Monday, market down, stock down big, be a good pick. Market up, stock drifting lower, even better. As soon as the market hits resistance, the stock is going to continue to go down. So let's take a look at the 5-minute chart, see how it finished the day. Well, you can see it did bounce off of the low Friday, but it preserved most of its losses. So pretty weak stock. The only thing that saved it Friday was the fact that the market continued to go higher. So HTZ, take a look at that. And some support right in here. I really want to see this horizontal support taken out. So we're going to take a pass on that. MS, Morgan Stanley, banking stock. Banks in general have been very weak. You can see it's finding a little bit of support in here. I think we can find something out of the financial sector. Roku, no. SHEL, not interested there. SLB looking pretty good. Got this upward sloping trend line here. That'll be next support. We have a low minus coming in here. I'd like to see these two broken. Then I would feel pretty good about SLB being a nice short. And this would be a little bounce here. Bearish flag. Next leg lower. That could certainly work. SOLO. There you've got a stock that's in trouble, continuing to drift lower, but tiny, tiny, tiny bodied candles. No, thank you. I want to see some of that nice momentum like here. Yes, that's where you'd want to start shorting on these long red candles because that tells you you've got some volume and some momentum behind it. UPST. Not bad. Got a low minus breakdown here. We've got a little bit of room down to that low, which is around $12 or so. This is not a bad looking stock. Out of the ones that I've highlighted, DAL kind of looks like it could be the one that we want to focus on for the short. I like these multiple breakdowns. I like the fact that it is falling through these major support levels. And the other one was HLT. So we'll take one more look at that. This stock tends to be pretty choppy. You can see these big waves in here as well. If it breaks down through these upward sloping trend lines in that 200-day moving average on decent volume, yeah, I think HLT is going to be a good one. Let's take a look at that volume. So it had decent volume all day Friday. How about DAL? Did it have decent volume Friday? Yes, for most of the day it did as well. So a little bit of bounce here. Here's the price action that you want to see on DAL. DAL is going to be the stock that I highlight for the short. This is the price action to watch for. Market up, up, up Monday. So we get the market moving higher from the open Monday, and we get the stock drifting lower like this. That is a sign of relative weakness. Then we just have to wait for the market to hit resistance. When it starts to roll over, start to see some bearish flag or bearish hammers, start to see some bearish engulfing candles, then you know it's time for the market to roll over, and DAL would be the type of stock that you want to short, but make sure you have that relative weakness. If, on the other hand, you get a drop Monday morning like this, and the market quickly finds support, then you're going to want to focus on the long side. And GIS is your stock for the long side. So the market pulls back, you want to see GIS tick, tick, ticking higher. As soon as the market finds support, the stock will go higher. Thanks so much for watching, everyone. I know it's a little bit on the long side. I had a couple of questions that I really wanted to answer, that being fundamental. Please read the free ebook. Please sign up for the free trial. Then you can learn a lot more about the fundamentals that we look at. Speaking of fundamentals next week, easy way to check those. briefing.com has a nice calendar, and you can see next week. There's not a lot on the calendar. We have durable goods orders, initial claims. That's about it. So it's going to be a relatively quiet week. And then after this week, we get into the jobs report and the ISM numbers. Those will be more important. And then we'll actually be very close to having Q1 earnings releases. So action should be fairly light this week. I'm looking for two-sided price action, price movement both ways. Thanks so much. Have a good day.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.